Good, good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. Welcome to June, everyone. It is Wednesday, June 1st, 6:26 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Pretty flat out there. Bitcoin's flat. Oil's up 2%, bouncing back. Equities are flat. Nat gas up 2%. Gold down 1.5%. Over on the macro front, we've got the Fed's QT, quantitative tightening era, starting today. I believe that number is $65 billion a month. We got PMI and ISM numbers today. Construction spending. We got Jim Bullard at 1 o'clock, who seems to be the pointed end of the spear on FOMC communication type stuff. And we've got an OPEC meeting tomorrow where they're talking about, I don't know if you'd say kicking Russia out, but kicking Russia out with the, the lockdowns and embargoes and everything. It's kind of a moot point to talk about production targets and quotas and stuff for a country that is, for all intents and purposes, been taken off the map. So we'll see how that goes. On the earnings front, I didn't see much here this morning, but after the bell, Chewy, Hewlett-Packard, MongoDB, UiPath, Elastic, and Viva, a lot of software companies in there this afternoon. Choppy session yesterday. No big changes on the chart, but there were a few issues that I want to go over today. Just checking in on the oscillators, still overbought. I'm still opting to follow price here than follow a second derivative indicator, although I put a huge amount of faith in this thing. Want to see if we can squeeze a little bit higher here. NAMO obviously came off a little bit yesterday on a flat day. When we go into SPY, you can see pretty much here a doji candle inside our zone here that runs from approximately 410 to 415. What the bulls want to see is a breakout above 415 and then get above the 50-day moving average coming in right here about 417. So that's a key level. If we drill down to the 60-minute chart, what we talked about yesterday is still in effect. You can see that we made an excursion above 415 yesterday, but we're not able to hold that. Had a really the final 2 hours of trading were not that hot, where they pulled it back into this zone. Remember, we had this prior gap that was filled, but I'm assuming there's still some muscle memory, even though I've taken the gap out. I think you want to look at this 411.34 area very closely, which aligns right in here. If you were to lose that, then actually this gap ought to be moved up there. I moved it down. It's right here at 407.70. If you lost 411.34, I think you could see a quick rug pull down to approximately 408. So, have some alarms in your system there if you're an active trader. Moving on to the Qs, very much the same thing. A little hesitation, consolidation, doji candle here under 310. Just like SPY, we made a mini break early in the day above this 310 area, but we're not able to hold it, so we're back in the range. I think on any kind of pullback, you got to hold this 306 area. If you don't, then pretty much a clear path down to test this lower gap. And if you're a tactical, active, short-term trader, I think that would be an objective short if that were to break. Right here at 306, it's also, of course, an objective long if you see consolidation like we had back here, where they made a run at it but it held. That's a nice dip buy for that $4 move or whatever it was, $4 or $5 move up to the top. But that's all tactical stuff. If you're swing trading or on a longer time frame, I would just key off of 306 and stay long against it. Moving over to IWM, could not pop 187.50. I think that's your pivot. As long, if very similar setup to SPY in that the 50 EMA comes in right above at 188.60. So, pop 187.5 and then try to take out the 50 EMA. Here it is exploded on the 60-minute view. I think what I said before still holds. If 185 slips away, I think you come into 183, fill this sliver of a gap here at, I think it's only like 50, 75 cents. It's, not much of anything. I think your big support comes in at 183, and that is the level that's got to hold the line to keep, keep the near-term bullish look alive. Yes, we could fall all the way down to 179, and you could make a case for the rally still being intact. You'd have a higher low, which is still constructive, but any kind of active trader is not going to want to sit through a $4 pullback and just take that. You probably want to exit your position at 183, and even if you didn't want to get short, look for a reload or a decision down at 179. Facebook, nothing kind of day other than to say it filled the gap. Remember yesterday we were a little bit shy as we entered the day. We came up right to the level that we had on the chart here at, let's call it 198, and it was rejected there and pushed back into the range. I think if you didn't have a position and you were interested in the name, I think you should have a couple levels alarmed in your system. Set yourself an alarm at 198. If price can break out, then you got a run to 203 and then potentially 209 on the upside. And if we encounter weakness, your first line of support here is 191, where there was a little flagging action back in here. And then you can see if price can gather itself right here at 191, hold the thing together, and reaccelerate higher. So you got a couple of nice lines here on Facebook to potentially shoot against. Just as an aside, you might want to make a note, June 9th, Facebook ticker goes to Meta, META, June 9th, ticker change. That's going to be a minor inconvenience because that kind of screws up our FATMAAN acronym and our FANG acronym. So probably got to come up with something else, or everybody just going to call it Facebook anyways. So we'll have to see about that. Moving on to Apple. Nothing too much. It's got to take out 151 now to plow higher. We do have these lows back here that's potentially causing or will be some resistance here at 151. On the downside, you want to have 147 hold. So those are your two levels there. But right here today, I think 149 is your pivot point. As long as it can hold that, then I think there's an opportunity to make a run to 151 and potentially higher. Tesla, not a whole lot going on. Made a morning run and then fell back to this 755-ish area. Yeah, 758 right here. I think 755 is your pivot. As long as that holds, 780 is your first target, and then 820. If it loses 750, I think it's vulnerable to come back in here to 720 and potentially fill this gap down to 708. Microsoft was not doing a whole lot, down 0.5%. Had some moments of brilliance where it broke out up towards 275 and then failed back in the range. I think you want to stay long against 270. If you're not in it, you could simply alarm 273, and if price can prove it, you can get a breakout, maybe go up to 277 as I have it here. I've got this measured move target up to 284. So from a technical standpoint, there's room above for Microsoft to go higher, whether this plays out or we wobble here. I think under 270, you're probably going to roll down to this 267.50 and see about filling this gap. And if that were to happen, I think 266 really has to hold to kind of keep things contained on the downside. You lose 266, then you lose this high and you lose this support bar. And, that would kind of be a check mark for the bears, as it were. You could easily make the case that after this run, this action here is consolidation, bull flag, however you want to look at that, and then a break above would then open up this upper target here. So I'm still long, still hoping this plays out for something more. Talking about something more, if you were focused on Amazon, you got a big payday up here, 4.4% up $100 on the free 50 club times 2. Gap up in the morning, never looked back. Remember, and I should have made a point of this last week and certainly yesterday, there's a 20-for-1 stock split that gets executed Friday after the bell. So I'm sure some of this has to do with, well, we'll buy now and then get, 20 for 1. And then all these people are thinking then the little guys will pile in when this is, 20 times cheaper. So that was a great trade. But even if you didn't even know about that, we've had all the levels really identified on this one, going way back, talking about 2150, then $50 increments, then 2300, then 2400. I think you hold 2400 today, keeps the door open to 2500, and no reason to think, just on the face of it, that it's got to stop here. I think if you've been long, hopefully you've been going to the bank, harvesting those gains and simply staying long. Will there be a consolidation or a pullback at a certain point? Sure, but that doesn't necessarily need to come by Friday. We could have 2-3 more days of explosive moves that could get up here to challenge the bottom of this gap. And you know how it works. I mean, momentum fuels momentum, and that's buying begets buying, just like selling begets selling. So don't discount the possibility of ending up a couple of $100 higher by Friday when that stock split becomes active. And remember what we always say. I mean, I'm sure there are people that are out there that said, "Oh man, I remember us talking about that. I never got in. That may be true, and I wouldn't fault you for thinking like that, but quickly switch your mindset to where's my next opportunity. So let's think about this. Just for the sake of argument, let's say we open weak today and we undercut 2400. Where's your next opportunity? Well, it's on the recapture of 2400, right? So you come in here to 2375 or wherever it goes, and then it gets its legs and reaccelerates up through 2400. Have yourself an alarm there and hit it, because that's a bullish move. Recapturing a well-defined level from below is bullish. You buy it there. If an at-the-money call is, too rich for your blood, I mean, they'll be expensive. But being expensive comes with the territory when you're trading, a $2,200 stock that goes up $100 in a day. They're not going to be cheap. And if you want to take a cheaper shot, you can buy a spread. You can buy a 2,400, 2,500 spread for Friday. Or you can just say, I'm going to take a cheap shot. I'm going to buy a $2,500 call, $100 out of the money, and make a bet that this thing continues its run. And, if you end up sitting at 2,600 on Friday afternoon, you'd think yourself, you'd be thinking good things about that trade. So don't be disgusted by missing this. there's always another opportunity right around the corner. And if you get disgusted, you don't set the alarm there, and then then you missed it again. So stay in the moment, set your alarms at where you'd be interested, and see how it goes. Just be ready to pull the trigger the next time. Google, exactly the same thing, up almost $30, but we had all the levels nailed, just as we talked about this morning. You want 22.75 to hold, or else we could come back to test the top of this gap. That would be a very objective area to look for a long. If price undercuts 22.75 and then re-ramps, you can have your alarm there for a long. Or if it opens strong and takes out yesterday's high, which was 23.15, let's call it, right in here, then you can buy that and look for a move to the top of the box over here towards 23.70. So Google and Amazon were nice trades yesterday. Netflix made a little run towards 200, fell back. I think your level here is this more or less 195. You stay long against that and see if you can get a push to 210. I would not want to see price go below this 187.50. That wouldn't be too hot technically. Moving back into this prior range where it could roll down to 177.50. So I think bigger picture, you want to see 195 hold today if you're long, and longer term or the next level down is 187.50. That's got to hold to keep the move alive. Semiconductors filled its gap yesterday, but then got rejected. I think this 243 area is a good line to shoot against. That's your pivot point for today. What you're looking for is a move back up to the top of the box, which is a nice trade in itself, from 243 to 247. That ain't all bad, up $4. But you get a breakout there, you could go up to 252 very easily. You lose 243, and then you're coming back down to the top of this box at 240. And if you weren't in it and you got that opportunity to buy at 240, I think that's a very objective level if you're of the bullish mindset. You get long 240. That's a big line of support. If you go back in the chart, it's also gap support. Try a long there with a stop just below, and then see if you could get a push back up to 243 and then 247. Going to go through ARK really quick. ARK didn't really have a good day yesterday. It underperformed. ARK-F was down 2%. Was not able to fill this gap. You can see got rejected, broke our little trend line. One thing positive is it held support here at 1850, so that's constructive. If you want to be long ARK-F, just be long against 1850, with your first target being the bottom of the gap here at 1925, and then you're looking for a gap fill at 1975. ARKG, technical misfire. Why? You got a fake breakout here, right? A breakout of the range, made a run up to 34, got rejected, and now back in the soup, which means back in the prior trading range. Being right here in the middle, I don't think you have a trade. You got to wait for either another breakout above 32.75 or wait till it falls to 31, and then 31 becomes your pivot point. But right here in the middle, you don't really have a line to shoot against. So I'd either wait for 31 or wait for 32.75. ARC K looks a lot like ARC F in the sense that it made a little run up here to 46 and then got weak, came back to 43.50, top of the range, which held. So if you're interested in the ticker, you've got a pretty objective long entry right here at 43.50. But if it loses that, you got to exit your position very quickly, because then you're back in the trading range again, and that would make all this look like a fake breakout bull trap. ARC W, same thing. Pulled back to the top of this little range at 57. The line that it really needs to hold is 56, as we've discussed. But if you're long against 57, that's fine. What you're shooting for is the bottom of this gap at 59.50 and then a gap fill at 61. I want to look at energy real quick because that was a disappointment yesterday. Here's WTI oil, and I was on top of the world at 6:30 when I did the video. We were trading 120 over the weekend. We were off Monday, but the EU reaffirmed their plans to embargo Russian oil, starting with the tankers, then moving to the pipelines. They want to be out of the Russian oil business by the end of the year. Of course, you know how it goes with politicians. Those things are easy to say when it's 80 degrees outside, but in the fall, it's a little tougher depending on what the natural gas situation and all that kind of stuff is. When the temperatures start to drop and you need heating oil and all this other kind of stuff, they could flip-flop on a dime. But anyways, so it traded up to 120, and then they just faded it the whole day. I did not see that coming. I think over the weekend and Monday, a lot of traders off, thin liquidity. The bulls kind of took that and ran with it without much opposition. And then when a lot of the traders came back to their desks on Tuesday, they obviously they concluded it was a little bit overblown, so they pulled it back to this 115 level where we're trading at right now. But here's the point that I want to make. Disappointment aside, with this price action from yesterday, still a very, very bullish chart. You can see that above 115, you don't have a lot of trading over here up to 125. I think as long as it holds, this 115 type area, the door is open to 125, and so I still really like the oil setup, and I just started playing around with the micro mini oil contract. That is, if you want to do that as well, the ticker is M as in Mary, CL, micro CL contract. I really like it. I mean, I'm just experimenting now. No big size or anything like that. The margin requirements are very reasonable, and the way it works is one micro mini oil contract is worth what is it worth? It's worth $1 a penny. So if the WTI contract goes up a penny and you have one micro mini contract, you make $1. So that's the leverage factor on that, and the margin requirements, at least for me, seem reasonable. So I'm messing around with a couple contracts just to get a feel for it. So you may want to explore that, and might be a good trading vehicle for you if you're comfortable doing that. ExxonMobil sent out a note yesterday as Exxon moves up to par at 100. That's going to be a really, really key level. If you go back to read Livermore, he observed that if you break 100, that big psychological level, especially for the first time, it can result in a very explosive move above 100. You know, like a quick, say it consolidates here for a while, finally breaks through 100, get a move up to 115 like really, really fast, that kind of a thing. So even if you're not in it, I would alarm 100 and be ready to go on any kind of a break above. Here's Valero. Opened up at 135, 136 yesterday. We're in it. In hindsight, should have just, close it out immediately. I didn't do that. Maybe you did. Still bullish the refiners, though. Carving out new highs. So I'm looking for this to go higher, but with the understanding that it is a little vulnerable. I mean, we're riding the 8-day up. I think you can use the 8-day as, a support level. If you lose the 8-day, then you get the 20-day down here. Or you can just say, 127.50. Pick a level right in here. It's not completely obvious where that support might be right in here. 127.50, certainly 125 if it lost that. I mean, it's going to be a failed trade if you're in, June options, something like that. I don't think that would give you enough time to re-ramp up to the levels where our strikes are located. So keep that one on the board. But still constructive energy. I don't think you want to be a guy trying to call tops on oil right now. Go by the charts. They're really bullish. I want to stay long energy. And we'll see what OPEC has to say. I think OPEC, let's say they kick Russia out. I don't think it means anything. I mean, the Russian barrels are doing what they're doing regardless. I don't think the production quotas have anything to do with anything because nobody's producing the quota anyways, except, maybe Saudi and the UAE. Everybody else has been falling short. That's been part of the story every time OPEC meets, they raise their production quotas, but they don't produce. They're falling short each and every month of what they're allowed to produce. So I don't think I don't think the barrels are out there. And just as a side note, the Russian ruble is the strongest that it's been in years. If you go look at a ruble chart, it's stronger than it was before the war. Why? Because when Putin made the decision, you got to pay for everything in rubles. You got Germany and all these other countries switching their currency to rubles to buy the oil, and that's driving the ruble higher value. So the ruble is really strong. Russia's making, even at a discount, making a windfall on the barrels that they do sell. The Russian central bank just cut their interest rate from 14% to 11%. So I don't think Putin is really hurting at this point, at least, on the energy front. He's managing to move whatever barrels that he produces, whether it's to China or to India or wherever his stuff goes. I don't think he's going to be in a position to ramp up his production. Say OPEC kicks him out. I don't think they say, oh, well, now we don't have any quotas, so we can do whatever we want. That may be true, but the expertise is gone. The capital is gone. So I think there's higher odds of Russia's oil production falling over time versus increasing over time, just because of the brain drain and the capital flight from the fields. I think he's going to be hard pressed to keep production just the same. And if you need an analog to that, look at Venezuela. Before Maduro and all the chaos, Venezuela, it was always, in the top 5 in the discussion of, oil. I mean, they're sitting on massive reserves, but they have no way to get it out of the ground. No expertise, no capital, no way to get it out. So now they're a rounding error in the world market for oil, because they've been, canceled by the world, as it were, and America in particular, with the super majors and all that kind of stuff pulling out of there. They've seen their oil producing capacity completely annihilated. Same thing with Libya. They used to be up there. They're nothing now for the same reasons. So anyways, few thoughts on energy. I want to thank those of you that have contributed to the channel with the Buy Me Coffee. If you've been in some winning trades and the analysis is helping you, I'd really appreciate a donation. Help me keep the lights on over here. You'll find a link to do that. The buy me a coffee link in the show notes. That would be very much appreciated. If you're new to the channel and you like the analysis, please hit the subscribe button, the alarm bell. A lot more coming your way. There's also another link in the show notes where you can register for all my content on the blog site. Drop in your email address, takes 5 seconds. Then morning, noon, or night, you will be plugged in to what's going on, and we'd love to have you. You'll also get an invite to the trading room, where we would love to have you as well. So let's see what today brings. Still leaning bullish until proven otherwise. Keep your head on a swivel, as always. Don't get committed to narratives. Be committed to price action. And if it's in the price, then that's really all you need to know. So let's see how it goes. Hope you guys have a good day of trading. This has been Chris Best with Traders Profit Compass. Talk to you next time.